All right, everybody, let's review January of 2022 uh, positions, and I will explain exactly what happened, why it was an entry, and I will comment on the progress of the trade itself. So January itself on GBP AUD in 2022 generated 15%. So let's go ahead and let's take a look at all of the trades. So I believe I will go on the after positions only because this simply shows the fully completed trade, and I can explain it faster rather than going before and after. So we had this long position and we had a successful long position with all the full take profit achieved. Let me go through the reasoning why. So we had a session high and session low. London session opened right here. We had some slow upside movement all the way till pretty much mid London session. And then right here with this candle and this candle, we had a breakout above the session high, which means that we closed above the Asian session high with a body closure. That's a retest, that's a retest, that's another retest. If you wonder if it's a short position signal, no, it's not, because we are not closed below both of the EMAs. So when we got this next strong green bullish candle, this is our long position entry. Why? First of all, it's above both of the EMAs. Second of all, it's a strong, nice, bullish candlestick. And lastly, it came after a break retest of the Asian session high. So we had a break, we had some candlesticks of indecisive, basically called retest, and then continuation. We broke, we slowed down, and we pushed back above. This is our entry. All three sections are achieved. And what happened, it showed a few candlesticks of consolidation, and then boom, coming towards the US session, it started to accelerate and actually achieved our take profit. Nicely done. Next trade, this one I believe is a it would be a break-even trade. What happened here? Once again, we have the session high, session low. The moment after London session opened, it right away went straight to retest the session high. Now, as you can see, this is not a breakout because we haven't closed above the session high. Next candlestick showed a massive red bearish candle. As you can see, it retested the session high once again, showed a strong red bearish candle, number 2, and number 3, it closed below both of the EMAs, which means that all three rules are achieved. So we rejected the high, we closed below both of the EMAs, and we had a strong selling red candle. So it's a good short position. So what happened then? It's been a pretty slow day. It moved aggressively down for the first few hours. Then it stopped, showed some messy price action, consolidation, sideways movement, and decided to reverse, coming into the US session. So right here, you were pretty close to your take profit. But if you apply this rule that you move your stop loss to break even after the halfway is achieved till your take profit, then right here this candle would actually trigger your stop loss and you would be on a break even. So you haven't made money, you haven't lost money. But if you don't apply this rule, then eventually it may actually be a stop loss even. Yeah, I mean, some people may say that when you see this consolidation, you are able to close the position manually. Yes, you can, but in my management system, I don't. I usually keep the position running to fulfill either the full target or stop loss, unless it's the end of US session, and then I have to close it manually. So it would be a break-even trade. Next up, we had another take profit. So what happened here? Once again, we have a session low, a session high. We had a breakout above the session high. As you can see, it's a clear, strong breakout, a closed highly above the session high with a body closure. Then we had like an hour or two of consolidation. We had some bearishness, and this candle right here is a tricky one because it may be a potential short signal. The reason why I just wasn't convinced too much is because it's the very first candlestick after many candlesticks above the session high. So it just naturally, it's like a human instinct that I was not convinced by too much. It just happened. I mean, this is a fairly valid short position, but I wouldn't take it. And the only reason is because if all of this mess right here would have taken place below the session high right here, and then we had this candlestick below the EMAs after the rejection, etc., then yeah, it would make sense. Now, after we had this strong breakout, then a bit of consolidation still above the session high, it tells me that a bullish continuation is more highly possible to continue. And this bearish candle can be like a simple a tricky signal, okay? So once again, just not to confuse you, if all of this mess right here, this consolidation would have happened below the session high, then it's okay. In this case, I was not convinced. And happily, I was right, because two more candles after, we had this bullish candlestick back above the session high, number one, back above the EMAs, number two, and a fairly nice strong green candle. So all three achieved, and this is the long entry. So what happened then? I believe this candlestick that actually pushed massively higher was due to some kind of a news, maybe fundamental release or something, because I don't care about the fundamentals. I don't look at the calendars. I just don't need them. Actually, I just trade by the strategy, and that's it. So so this candlestick is most likely due to some sort of a fundamental release that was in our favor this time. So yeah, but it's just a pretty tricky conditions, okay? Because it just depends. We are not a robots, we are humans. So sometimes this natural instinct, I remember this, that it just happens that you are not convinced that this is a valid short entry. And if you don't feel like it, it's okay. Just skip it. Just see, wait for the next candlestick. Maybe you will get the better entry. In this case, I was saved from a stop loss, and a very aggressive stop loss, yeah, because this candlestick was massive. So yeah, it's just, I mean, happens sometimes. So nothing to worry about. Next trade, once again, a fairly nice take profit, and also an important lesson right here, because I don't usually take these trades unless I already have some profits banked. And let me explain you why, because this may seem like a perfect entry, but it's not super perfect, okay? So first of all, we do have the session high, session low, all good. London session opened. It showed a bit of an indecisive movement, some upside, some downside, and finally we saw the first retest of the session low. Next candle, another retest and rejection of the session low because we haven't closed below the session low, so we are still above it, so it's a rejection, not a breakout. And then the next candlestick showed a nice strong bullish candle. It closed above the EMAs, and it was after the session low retest, but the slight problem with such setup would be that this entry candlestick isn't actually touching the session low or high. I mean, it if this would be like vice versa, like a short position. So it's in a way a valid entry, but I would take these trades only if I already made some capital, some profits, and I can afford taking this a bit of a higher risk position, because in case I lost this 1%, I'm still up like a 5 or whatever percent. If I had two successful trades before, so I can afford to have a loss on this one, yeah. But if this would be my first position of the week, I wouldn't take it, because ideally you would like this candle to be above the EMAs, to be nice strong green candle, and to be retesting the session low or high, yeah. Because this candlestick is, yes, it came straight after this very nice candle, but the entry candle itself isn't touching or is not super near the session low. So this is it's a valid entry, but it's a bit of a more like higher risk entry. So I would recommend taking this trade only when you can afford to take a loss. And once again, let's say a trading gods, yeah, was in my side, and this was a successful trade. But sometimes, and to be honest, usually these trades are not as successful as this one, yeah. So once again, it's a profit, it's good, but the entry is not among the greatest, okay. Next up, we had a loss, and this is a very quick loss, yeah, as you can see. Even though the setup looks amazing, it's been a fairly quick and painful position to see, yeah. So what happened once again? We had the session low, we had a session high, London session opened, a few candlesticks, we are already retesting the session high. We had some retest, it's actually a breakout, but it's super minor, super minimal breakout. And then boom, this strong red rejection. So all three aspects, all three elements are achieved. A big, strong red candlestick. It closed below both of the EMAs with a nice body closure, and it came straight after a rejection of the session high. So this candle is rejecting, is below EMAs. It's a nice, strong red candle. It's a great short entry. Stop loss just a bit above the session, just a bit above the entry candle high in this case. And what happened, next few candlesticks, boom, spike, took me out. It's a loss, a minus 1%. All good, always happens. I mean, there is nothing to worry about. It's just one of those trades that you have to also analyze. Next up, it's another take profit, yeah. So what happened here? Once again, because we already had a pretty successful month, quite a few take profits. So I actually took a risk on this one, and it paid off. I was pretty close to being stopped out, but fundamental news, I believe, helped me on this one. We had a session low, session high. Session high was retested multiple times, as you can see. So this was a very nice and clear retest. This was a pretty candlestick about nothing, and then boom, this strong red candle below the EMAs, and after the session retest, but the entry candle itself is not retesting the session high in this case. So it's the same setup that I explained before. It's a risky entry. It's a possible entry, but it's not always the best. So if you can afford to take this 1% loss, and it won't hurt you too much because you already made like a decent profit on the week or the month, take it. But if you are just getting started, your first few trades of the week, then I would skip this one, even though it played out super nicely. As you can see, it played out super nicely. But yeah, it just happens sometimes. So it came back quite a bit. I was pretty close to a stop loss, and then boom, fundamental news, most likely, because these big candlesticks within the US session usually forms because of the fundamental news. So it just melted all the way to the take profit zone. So yeah, that's another trade. Next one, it's a loss. What happened here? We have session high, session low. First few candlesticks, we had a breakout below the session low. Next candle, a bit of a bearishness, then a rejection came back above the session low, but nothing interesting because we are not above the EMAs. It's a not super strong, nice green candle, so there was no entry. And then the next candlestick showed a perfect setup. So what happened? Another retest of the session low, rejection, a very nice, strong, bullish green candle, and it closed above both of the EMAs. Only by a pip, like a pip or two, but it's valid. So I took a long here. We have a stop loss here, and what happened? There was nothing to see here. It's just empty space because few candlesticks later, boom, a pretty aggressive red candlestick that took me out, and it's a loss. Okay, next up, it's another successful trade, a pretty good one, a beautiful one. This could be a break-even position as well. Depends on your management if you apply the rule or not to move your stop loss to break-even. But what happened here? We have a session high, session low is not relevant in this trade, so there is nothing to see there. So we had a London session opening, a few candlesticks straight to the session high. Retest, breakout. This is a breakout closed above with the body closure. Next candlestick, retest, no short signal because we are not below the EMAs. And then next candle, a nice green bullish candlestick. What happened here? Once again, all three elements are respected. We rejected, or we actually retested the session high and showed continuation. So in a way, it's not a rejection, but yeah, I mean, we took out the session high, retest, continuation candlestick, nice strong bullish candle, and closed above both of the EMAs. Yeah, EMAs are here, our candle closure is here, all valid. So we took this long. I took a bit of a higher stop loss. Ideally, it would be somewhere here, but I just wanted it to be below EMAs just in case they get retested, and they did right here, but it's still a pretty safe position. So what happened? We moved to the upside. We almost achieved our take profit area, to be honest, and maybe even on some brokers, depending on the spread size, this could be a take profit. But then what happened? We showed some retest, rejection. It completely reversed, retested the Asian session high once again, and then reversed once again and went straight into the take profit area. So yeah, it's a pretty interesting position. It took a while to fulfill, but it's a valid one. And we have two more. This one was a loss. Yeah, it's a loss. So what happened here? Session low, session high, and London session opening. This candle boom, retest. This candle boom, retest, and this candle boom short. And this is exactly once again what I'm saying. Okay, this is not the perfect entry. As you can see, I took these similar setups before on January, and they both been successful, but this one is not. Yes, this is a nice red candle. Yes, it's below the EMAs. Yes, it came after the retest of the session high rejection, but it's not actually touching, or it's not super near the session high itself. So it's the same setup. I took it, but it's been pretty consolidative and then eventually took me out. This candlestick for a short position was way better because it's almost at a session high. This would be a super nice valid short as well. But the same thing would have happened. It's a stop loss, and there is nothing you can do about it. I mean, for the rest of and this kind of setups are the most annoying ones, because for the most time your position is in a loss and you just see it consolidating next to your stop loss, and it's pretty annoying psychologically, I would say. Yeah, I mean, I wouldn't mind this thing to happen somewhere here when you are in a solid profit and you are able to wait it out, but when it happens next to your stop loss, it's a pretty annoying thing. But yeah, it's just one of the trades. It's a loss, and we have the last one for a profit. Yep, on a 20 on a 30th, I believe. It's been a pretty nice position. We had a session low, session high, London session opening, retest, breakout. This is a breakout candle. These two, a retest, a retest again, and then we had a nice strong continuation. This is not a short because we are not below the EMAs, and this is a nice strong bullish candlestick. So once again, all three aspects are met. We are break, retest, continuation. This is the candle. We are strong, nice green bullish candle, and we closed above both of the EMAs. Beautiful long position. So we took it, and it went fairly quickly all the way to the take profit, and it's a pretty decent position. And also I marked this chart because I believe it's something important I wanted to mention. Look at this. Look how messy and look how bad this looks. The whole Asian session was just a complete mess, as you can see. A lot of spikes and wicks, which is not ideal. It creates this extremely difficult environment to trade. And even though right here we had a short signal, right here we got a long signal, it's a mixed signal chart, I wouldn't take this short or this long simply because of how messy the chart is. Sometimes it's better to avoid the position rather than take it as a robot. Yeah, yes, this is the entry, short. No, I mean, it's a valid entry because we have right here it's a break below the session low. Right here it's kind of a retest. Right here is another continuation candle, strong red candle below the EMAs, below the session low. But just seeing these wicks right here, these two wicks, these wicks, and all of the mess right here is just not the greatest, you know. I mean, it's the same as, yes, you were able to drive when weather conditions are super bad. It's like raining, thunderstorm, maybe even like a small tornado is happening. Yeah, I mean, you can go ahead and drive somewhere, but you will prefer not to because it's not the safest place. Yeah, so sorry, the same thing applies here. I mean, the chart or like the weather, yeah, it's bad, it's unpredictable, it's super messy. So I would prefer to wait it out, to stay safe in this case, and just wait for the better conditions. Maybe check other currency pairs or wait for tomorrow. Yeah, the market won't go anywhere, so there is no rush. Okay, so that's, yeah, it's a good example on when you have such an unpredictable conditions, it's better to simply wait it out, because even if you took the short here, most likely your stop loss would be somewhere here, so it most likely you will be stopped out. If you bought here, stop loss somewhere here, you may seem happy, here, but then boom, a reversal. It's unpredictable in these conditions when you see a chart like this. So it's just simply better to wait it out. So yeah, that's the month of January. I explained quite a few trades. I believe it's becoming more and more clear how we actually execute into the positions. So let's continue on the next months, and I will see you guys later on. Bye-bye. Alright, everybody, welcome back to another episode of Refining Entries. And in this one, we will take a look at the GBP AUD 2022, the month of February. So, the February itself generated 16.1%. It was a very good month. Looking at the historical data. So let's go ahead and let's go through these trades so we can take a look at them, and let me explain the reasonings why the trade was good and how it ended. So very first position, it was a very quick one and active one, and once again, by looking at it, I believe you already can notice why this entry is not ideal, but it's still a valid entry. And you may ask me why we took this trade. Basically, you were able to take this trade because you had a fantastic January. Yeah, January itself generated some good returns, so you are able to take this trade. Yeah, I mean, usually, as you know, when you're just getting started or you don't have a profits locked already, then it's not ideal to enter on such candlesticks when the entry candle itself isn't super close to the actual session high or low, yeah, depending on your position side. So in this case, we had session high, session low. London showed some movement, some push to the upside, retest of the session low, and then following after the retest candlestick, next candle showed a nice strong bullish candle. Also, it closed above both of the EMAs with a nice body closure, but it's not actually touching or is super close to the actual session low. So it's not an ideal entry, but it's a possible one and a valid one. So for the backtesting purposes, you should take all of the trades that you can, especially when you're backtesting, yeah, just to get as much data as possible. And in this case, as you can see, the position went well. We had a retest of the session high, some rejection, and then it exploded. And I believe this candle, once again, is due to the fundamental factors that played out in our favor, yeah. But the chart itself suggested that this is a valid long position. Next trade, This one was a very slow one, a boring one. Once again, what happened? We had a session low, session high. London, we saw a breakout above the session high right away. The first candlestick of London session, a nice strong bullish closure above the session high, so it's a breakout. Then all of this thing right here was nothing more than just a retest. You may ask if this candle or this candle is a short signal. Well, this one is definitely not, because it's nowhere near the session high. It's not a nice strong red candle, so it's not. This one is fairly okay, but it's not. I mean, you can easily see that this candlestick is, you wouldn't say that yes, this is a nice strong red candle selling pressure. Yeah, I mean, it's a valid candle, but there is no momentum in this candlestick. Yeah, so I would ignore such candlesticks. Yeah. Then we had a bit of a consolidation, some indecisive price action right here over these few candlesticks, and then a strong bullish comeback. Yeah. So what happened here? It's a break, retest, all of this, and then continuation candlestick back above the session high. So this is a nice strong bullish candle. It closed above both of the EMAs, and it came after the break, retest, continuation. Yeah, so this is a valid long entry. So you took an entry here, stop loss just a bit below the entry candle low in this case, and then for the rest of the day, pretty much the market went sideways. It's indecisive price action, nothing too interesting happened here. So I had to manually close this position in this case because it's the end of US session. This candle was, I believe, the last US session candle, and then midnight and Asian session begins, my time zone at least. So basically, you had to take this position and close it manually. So that's why I logged 0.2%, because that's something like that is banked. Next trade, a successful one, and this one is a way better entry. So what happened here? We were super close to being stopped out, and maybe even on some brokers, depending on your spread, this would be a stop loss, depending on the broker. Yeah, but well, on this a trading view chart, we survived, so that's why I kept it as a success. So what happened? Once again, I believe you can now tell me the entry, because we had session high, we had session low. London first candle confirmed breakout of the session low. Now we need a retest and continuation for short, or a comeback back above for a rejection. Next candle, a retest of the session low, nothing too interesting yet, and then followed by the next candle, which is a rejection candle. It rejected the session low, came back above the session low with a nice, fairly strong green candle, closed above both of the EMAs, even though by a fraction kinda, but it's still visually a valid closure above both of the EMAs. And then you took the trade, stop loss slightly higher on this one, but still it could be even higher, to be honest, when you see what happened. But when you don't know, it just was a pure luck that the stop loss was here and it was not actually achieved on this spike. Most people, I would say, would place the stop loss somewhere here, so this would be sadly a stop loss. But well, we have what we have in this case, and we had some bullish momentum, then a complete reversal, pushed all the way back to the downside, and basically moments before the US session it started to pick up once again and show this bullish rally, and with this spiky candlestick, in this case a take profit was achieved. So yeah, it's just one of those trades. Let's go to the next one. Okay, the next one. Once again, I can easily expect you to say what's wrong with the entry, even though it's a valid one, but keep in mind that, yeah, we had a session high. As you can see, I don't mark session low because we had such an active bullish push throughout the Asian session that in this case on London opening the session low doesn't make any sense. It's not within the game, it's not for reference, so basically we can I just skipped marking it, yeah, because it doesn't make any sense here. So what happened, we had this candlestick of an entry, we had a retest or actually a breakout of the session high followed by immediate rejection, then a few candlesticks of nonsense, nothing interesting. This one is fairly okay to enter as well, but this one is better. It's better because it's bigger, it actually holds more selling pressure, so you can say that it's a nice strong red candle, yeah, selling candle. But the problem is that it's not at the session high once again. So you can take these trades when you have some profits locked, when you can afford to take a loss, yeah. So, and because we had a few already successful trades before on the month of February, we were able to take the risk and actually take this trade because this candle looks really good. It's below the EMAs. It's a nice rejection candle, strong wick also here. The only problem is it's not exactly at the highs. But once again, I believe you know the concept by now. So it's a trade, and basically it's a fairly straightforward trade. It went nicely and aggressively downside and achieved the take profit level. Yeah. Okay, next trade. This one is a loss. Yep. So what happened here? Once again, a very nice setup. It just ended up in a stop loss. So we had a session high, session low, London, first candle. It's right here, so nothing too much of an interest. Next candle, retest or of the session high, followed by the breakout. Then we had few candlesticks of indecision, followed by this big red candle, which is a retest. Yeah, this is a break. These two are not retesting the session high. This one retested. It's not a short because we haven't closed below both of the EMAs. It's just pretty much sitting at the EMA. And the next candle, continuation. So this is why it's a valid long entry. Nice strong green candle, buying pressure, closed above both of the EMAs, and it's basically above the session high after the break and retest. So this is a continuation candle. That's why you are able to take the long here. This candle, this one is even better. It's a very strong rejection candle, continuation candle, yeah. Above EMAs, big, solid bullish pressure forming. But eventually, even if you took here or here, what happened, we had some indecisive movement, so the momentum was lost at these prices somewhere between 9050 9060, and then we had a reversal and a pretty aggressive bearish move. So this was a loss, followed by another loss, as I can see. Yep. Session high, session low. First few hours of London session, we had a breakout, a retest, and a comeback. So this is not a break, a retest continuation. Here and here, no positions because we are not above the EMAs. This one, we are above the EMAs, but we are way too far from the session low to even consider this an entry. And then we had a comeback, another retest, and this is a nice rejection from the session low. Nice strong bullish candle above the EMAs and after the rejection. So all three elements are met. So it's a valid long position. And then basically what happened, followed by right after the entry, few candlesticks, and we are out. It's just one of those days and one of those trades. Nothing to worry about here. Okay, followed by 2%, which means that it's been a slow trade and we had to close it manually at the end of the US session. The entry, session high, session low. First few candlestick retested the session low. It's right here. It's a breakout. No retest continuation, and this is a rejection candle. So what happened here? Nice strong green candle above the EMAs. Also, after a rejection of the session low, it's basically a simple valid long position. So you took the trade. For the most part, for the next few hours, it's a pretty messy sideways movement, and beginning of the US session, it started to pick up. So you was very close to the take profit area, but eventually it continuously moved sideways, and by the end of US session, it's basically sitting here. So it's a 2%, maybe even a bit more than 2%, 2.1, 2.2, but you have to close it manually because this is the end of US session and you never leave your positions overnight. Next trade, another slow one. It's a short one position. So we had session high, session low, first London candle, breakout, retest, continuation. Beautiful. As you can see, break, retest, continuation. We rejected all the way this session low. So we had a nice, very strong red candle below the EMAs, below the session low after the break and retest. So all of the elements are met. So you took a short here. Market came back a bit and then aggressively moved lower. Unfortunately, the take profit was a bit too much to ask in this case. And then we saw a rejection, consolidation, and a comeback back above within the US session. So this could be also a break-even trade because here we are way more than halfway point till the take profit. So you're able to move your stop loss to break even. And in this case right here, you would be out at break even. So no loss for you, which is always good. But in backtesting phase, you should not apply this rule, I would say, because you are backtesting, you are gathering the information, you're gathering data, so you need as much as possible. So in this case, it's a possible break even, but let's lock it as 0.2% because at the end of US session, it's still open and it's pretty much sitting at 0.2% profit. Next trade, a successful one. Yep, and a very beautiful one, pretty much the same as the last one. We had the session high, session low, break, retest, continuation. Beautiful, yeah? So the candle is a nice, solid red candle below the EMAs, and after the break and retest occurred, this is a continuation candlestick. So we took a short, stop loss just a bit above the high of this candle, and it's basically straightforward, moved all the way to the downside without giving us any kind of nerves wracking experience, while it's messing right here. So it's just completely straightforward, dropped all the way to the take profit area. Next trade right here. Once again, pretty much the same entry as the last two. Let me zoom in. Session high, session low. Once again, London. First few candlesticks, nothing too interesting. Then break, retest, continuation. Easy. Below the EMAs, below the session low after the break and retest. Nice, strong, solid red candle. Took a short. It went nicely. Then US session reversal back to the session low, and then back below, and eventually it's out at pretty much a midway point, which is at about 1.5%. Simple. Next trade, a successful one, and once again pretty much the same entry. Now this is the session low. Session high you can't even see because I believe it was a very aggressive downside session. So yeah, what happened here? That's a retest, that's a breakout, that's in a way a retest and continuation at the same time, but I would always like to see something bullish as a retest. Yeah, when you have like a break, an actual retest, a comeback, and then continuation. This candle is a valid one, but once again, this is one of those trades where you have to take it if you're feeling confident and you can afford to take a bit of a riskier position. Yeah, in this case I decided to skip one more candle, and this was a comeback candle, but it's not above the EMAs, so there is no long position here, followed by the next candlestick that actually confirmed me to go short, because it's now a very clear break, retest, all of these two, and continuation. Nice solid red candle below the EMAs and below the session low after the break and retest occurred. So it's a better short position than this candle. Yeah, so it's always better to wait. Basically, if you are not sure if the entry is good enough, just wait one more candle, just see what happens. Yeah, you may miss it and it completely went off, it's okay, but you may actually find it better. You may find a better entry, or you will notice that because you waited one more candle, just be sure you actually save yourself from a loss. Yeah, so it's better be safe than sorry, yeah, for a loss. So yeah, what happened here? Same thing. Nice break, retest, continuation, and we dropped pretty straightforward as well. First part of US session, we are already at the take profit area, and the last trade of the month on the last day, and it's a loss. Session high, session low. London first few hours, nothing interesting at all, just a complete mess. Then we had a break followed by rejection. So no retest continuation. It's a break and and a rejection. Nice solid green candle back above the EMAs, back above the session low after rejecting the session low. So it's a great and a valid long position. And what happened next? Few candlesticks in, reversal and stop loss. It happens, all good, nothing to worry about here. One of those trades. So yeah, that's it for February. I believe now your entries are becoming better and better, and you're starting to understand the concept behind every single entry. Okay, so let's continue going through the trades, and I will see you guys on the next episode. All right, welcome back. Welcome to another episode of Refining Entries. And this will be a short one because we will take a look at March. And the month of March was terrible. It was actually a really, really bad month. Okay, because as you can see, we had only 0.6% in profits, because on GBP AUD in the month of March of 2022, basically the whole month was such a complete mess. A lot of sideways movement, a lot of manipulation, maybe so to say, a lot of mess. So let's take a look at the trades. But basically that's a great example that not all of the months are great. February we had a fantastic month, 16% per month. It's more than some people make per year, simply holding some stocks and assets. So it's a fantastic way. But March, for example, was a pretty a messy one. So let's begin. First trade, it's a loss. As you can see, the entry is good. We had a session high, we had a session low, some mess over the first hours of London session, then boom, a break and a rejection. Okay, it's a nice solid green candle, back above the EMAs, back above the session low after the rejection. Yeah, so it's a solid entry. We took a long here, and basically within the first few hours it was fairly messy, moving sideways, and eventually within the first part of US session it reversed and dropped below our stop loss, actually achieving our stop loss as well. So yeah, it's a loss, and then we had another loss. Once again, this entry is a bit of a risky one. I believe you can see why. Yeah, you can see why. And this is the great example that not always the risky trades are well worth it taking. So in this case, it was not. What happened here? Session high, session low. London, we have a retest, a breakout, a rejection, and kinda continuation, but it's not super nice because it's not at. If this candle would have been closed below the EMAs, this would be fantastic short. Yeah, this is, yes, it's below the EMAs. Yes, it's a fairly nice red candle in comparison to the previous ones, but it's not actually super close or touching the session high. So it's a risky entry. You know these types of entries. In this case, this trade was a loss. So yeah, nothing to comment here. Then we had a successful one, and yep, this one is way better entry. We had session high somewhere there, session low here. London first candle breakout. Now we need a retest or a rejection. So we had multiple retests. This candle is a fairly good for short as well, and I'm not sure why I missed this candle, because this is a good short candle as well. This one is better the way I took it here, but this is also valid. So you were able to short from here, stop loss here. Yes, it's not exactly touching the session low, but I mean, it's super close. But well, whatever. We had another indecisive candle, another retest, and another, in a way, rejection candle, just like 1 pip, 2 pip shy from the session low. So it's acceptable. It's also a nice red solid candle, and it's below the EMAs. So it's a valid short entry. So what happened? We almost got out with a loss as well, because so unpredictable the March, yeah, the month of March. But eventually we were safe. So the stop loss was a bit higher, intentionally, because I just saw what's happening within the March, and as you can see, that's already the 10th of March, and we are sitting at 3 trades. So you can imagine that the month was pretty messy. A lot of no trading days happened. So I just decided to put the stop loss higher for this position, because, well, we know that March so far was bad. So just to give yourself a bit of a breathing room, a breathing space, I just set stop loss a bit higher, yeah. So this actually saved the position, because if the stop loss would have been somewhere here, that's where it would be actually triggered, and it would be another loss. So this actually saved the position. So we had some indecisive movement, and then a complete meltdown following the mid of the US session, pretty much. So it's good to have a winning position at least, followed by another loss. Yeah, beautiful entry, session high, session low somewhere there. London rejection or retest, breakout, retest. So you would expect to have continuation or rejection. In this case, it's another retest and a very clear rejection. Yeah, super nice, strong red candle below the EMAs, rejecting the session high after it showed some breakouts and retest, etc. So it's a very nice short signal. But what happened after we took it? A few hours went sideways and then followed by a strong bullish push within the US session already, actually triggering the stop loss order. Next trade, yeah, that's pretty much the whole March. Yeah, looks like that. So session high, session low, London, nothing, retest, breakout, rejection. Nice, strong red candle below the EMAs, rejecting the session high. So it's a valid short entry, but you can see what happened. For the rest of the day, we failed to break below the session low. We rejected session low multiple times, just a complete mess. So by the end of the day, the position is still here and it's basically sitting at somewhere around 0.6%. And last trade of the month of March, it's actually, you can see it's the last day for 31st. Also a long position, eventually out at break even or at a very small profit, because, well, session high, London, break, retest, continuation. This spike is not the most beautiful one, but it's still smaller than the whole body, so it's okay-ish, I would say. So we took the trade here. Stop loss is okay. It's above the EMAs. It's a fairly solid green candle. It's rejecting the session high from the above in a way, so it's a continuation candle. And basically for the rest of the day, nothing more than just sideways movement. So yeah, that's the month of March. Super slow and very messy, but it's good to have these months because it shows that the strategy is not a miracle and it's not always providing you these beautiful trades and 10% plus months, because, well, sometimes, yeah, it's a great month like February, 16.1%, it's amazing. But yeah, well, the March is only 0.6. We haven't made even 1% of profit, which is, well, not ideal, but that's the game. That's the process. Yeah. When you look at a big picture, you're running 31.7% in total from the very first day of the year till the end of March, which is amazing. But if you look just at the March alone, it's nothing spectacular. Yeah. So yeah, thank you for watching. Let's move forward into the next episodes. Alright, another episode of Refining Entries, and in this one we will take a look at the month of April on GBP AUD on this 2022 a year of trading. So we had 5.1% for April. Also, I would say fairly messy month, just as March. March was terrible, but April a little bit better. But you will notice that we had quite a few positions, but only 2 of them were successful, like fully successful. One I will show you was a very risky one, and then a few of them are kind of closer to break even, and then 2 losses as well. So let's go ahead and let's go through these trades. First one is a loss. It's a fairly beautiful entry. I believe by now you can already say what's going on here. Session high, session low, London, first few candlesticks, nothing too interesting. Here we had a break, rejection, back above, no closure above the EMA, so no entry here. Followed by another retest, rejection kinda, and then followed by this nice green bullish candle. First, it closed above the EMA's second, and it's fairly after the retest of the session low third. It's not quite touching, but it's super close, like 1-2 pips shy from the low, so it's acceptable. But after the moment you took the trade, basically the market reversed, no sign of mercy, just straight down and got our stop loss order. So yeah, one of those trades, nothing you can do about that. Next up, it's a winning trade, fairly beautiful one as well. Session high, session low, London. We saw a rejection, we saw a breakout, next rejection, so no a break retest continuation thing going on here. It's a break and rejection straight away, next candle, kind of a retest, once again like a pip shy from the low. It's fairly acceptable when it's not that high, and then a nice strong bullish candle above the EMA, so fairly decent entry, beautiful candle. So it went fairly slow but fairly confident all the way to the take profit area and even beyond that, so it's a good one. Next up, it's I believe a break-even trade. Yeah, super messy as you can see. Once again, session high, session low right here. Haven't marked that because it doesn't make sense, at least for the beginning part of the London session, so whatever. Session high, we had London retest, breakout, rejection. This is a short candle right here, this one. Once again, strong, nice strong red candle below the EMAs, and after the rejection of the session high, beautiful, followed by some retest, rejection. This candle is also a good short signal, also good short candle, but this was the first one, that was a good one, so we took this. But as you can see, for the whole day, all the way till the last US session candle, it went sideways, so it was super boring trade. Next one is a loss. Yep, beautiful entry, session high, session low, fairly active bearish Asian session. London, first few candlesticks, nothing too interesting, then rejection, and a strong rejection, a nice strong bullish candle above the EMAs, after the session low, retest and rejection. Yeah, we took the long, and once again straight away, next candle, boom, rejection, and eventually showing bearishness, and it took our stop loss. Happens sometimes, especially on these messy months. Next trade, a good one, and this is an important one, I believe. Yeah, this is an important one, because usually I'm first of all, let's go through the trade. Session high, session low, London, nothing, rejection, breakout, followed by rejection, and it's a good long position, strong bullish candle above the EMAs, above the session low after the rejection. But the reason why it's important, this candle is a very big candle, and the main reason is that you may notice that my stop loss is not below the entry candle low, and the reason is because the stop loss was fairly way too big. It was like 60 pips or so, which is a lot for GBP AUD to go through, which means that my take profit will be like 300 something pips, which is a lot. And GBP AUD usually will not go that much in one single trading session. Yeah, one single day. 300 pips is a lot. Like even 150 pips is a lot for the market to move when there are no major fundamental events. So that's why I had to make the stop loss just a bit lower. The reason is that's the entry point, so I made the stop loss just a bit below the session low, not the candle low, because then the stop loss is huge, which means that our take profit is 3 times as huge as our stop loss. So it's fairly impossible for the market to move that much in one single day if there is no fundamental events, like massive events happening. So this is why. So keep this in mind. If you see a massive candlestick, which is a lot in pips, I mean, like visually, it may not look like something extraordinary, but when you measure it in pips, you will notice that this is like 80 pips or so. Already, this stop loss was, I believe, like 40 pips or so, which is decent, but the average stop loss for GA is usually like 27 pips, 25 pips or so. Yeah, so even this is twice as big as the average. So if I made the stop loss here, this would be like, I can't remember like exactly, but like 70 or 80 pips, which is way too much because our take profit is 3 times as much as our stop loss. So yeah, that's why I made the stop loss here. I mean, we were able to make it even right here, even a bit smaller still. Yeah, but well, eventually it went up and even beyond that a bit. So it's a good trade. But if my stop loss would have been right here, then the market would, my take profit would be somewhere even here maybe. So that's a lot to ask for a currency pair, yeah? So always keep this in mind as well. It's a good lesson. And the last one, this one. And right here also a fairly interesting thing, because here we were like 1 pip, maybe 2 pips shy from our stop loss. So in most brokers, I believe this would actually trigger the stop loss order, depending on the spread size, etc. Yeah, but well, a TradingView still kept the position going, so this is why I still marked this as a winning position, 1% profit, even though it went sideways exactly till the Asian session. But in most brokerage, this 1 pip, 2 pip shy from the stop loss usually will take the stop loss order. So it's a fairly controversial, yeah. I mean, some brokers may not, some brokers may trigger the stop loss. So, but it's just as a position, it was a very good short. Session low, session high. We had a break, followed by a few hours of us just messing around somewhere, followed by a retest. This candlestick, you may seem it as a long. I wouldn't. It's just a bit of a too small for like a convincing a long position. It's just, yeah, it's okay. It's back above the session low after the break retest. I would expect continuation. I mean, when you see this a break followed by immediate rejection, then yeah, it's a different thing. When you see a break, like 2 hours of consolidation, a retest, and these like smaller candlesticks, I'm not too convinced to go long. The momentum is not as strong as when you have a break followed by a straight up retest, yeah. So, and this, in this case, I was right. We had another rejection candle, not below the EMA, so no short, followed by a beautiful candle, rejection of the session low after the break retest, also below the EMAs, and a fairly nice red candle. Yeah, we had nice body, nice rejection wick from the top, which means that the selling pressure was from here, pushing, and all the way pushed to form this body and left the wick. So we took a short here, and for the most part, it's been annoying sideways momentum. But if we consider that we have this position still without this thing right here, then it's a fairly nice 1% profit. Yeah. And we had to close it manually because the position, we don't hold positions overnight, and if you do have an open position by the end of US session, you have to close it manually. Simple as that. So yeah, that's the month of April, 5.1%, fairly decent. So it's a fairly good average. Yeah, 5% a month. Yeah, it's good. We had, of course, better months and worse months. So yeah, that's another episode. Thank you guys for watching. Hopefully it's been beneficial. And by this episode, you should already have the clear understanding of the entries. Yeah, you should have. Now, when you go and watch the next episodes, it should become boring for you. Because when I click on a chart, you should be able to see like, okay, I know what happened here. I know what happened here. Yes, this is a rejection. Yes, it's a long. Yes, that's a short. Yes, that's no position, etc. Yeah, so it should start to become as clear as possible, and basically eventually you should, I believe that you will skip either the next episode or uh, the one after the next episode. You will be like, okay, I just know all of that stuff, let me move to the next section, because that's my goal. So my goal is that you do not finish refining entries episodes, because eventually you will become bored and you will know exactly why I took the trade, why it's a good entry or not so good entry, but you know exactly why. Yeah? The moment you reach that point, move forward, move on to the next section, and eventually when you finish the whole program, start your own backtesting, start your own trading. Yeah. So thank you guys for watching once again, and let's move on to the next video. Alright, welcome back to another refining entries episode, and in this one we will take a look at the different currency pair NZD USD, and we will take a look at January of 2022. So as you can see, NZD USD generated 10% throughout the whole January. We will go through the trades, and to be honest, NZD USD is one of the pairs that is quite interesting, I would say, because most of the times it starts to move within the US session. So it's a bit more difficult to find the positions within the London session, but it's possible, and it's a pretty decent pair to trade, even though I would say something like Euro NZD might be even better. But of course, you go ahead and do the backtesting yourself and find those pairs that actually works for you. So let's go through the trades. The first one is a fairly simple one, even though let me tell you why I'm not the biggest fan of such entries. First of all, the only reason why is it's just a very bit early, because as you can see, this is the second candle of the London session. So this is why it's so early. Yeah, I mean the London session just started and you already have an entry. So these kind of entries are not always playing out nicely. In this case, it did, but also a few things to mention. The candles of the candle size, the entry candle size is also, as you can see, fairly a big one in comparison to the previous Asian session candles. Yeah, and as you may remember from some previous episodes of refining entries, when you have such a big candle, it's okay not to put your stop loss below the entry candle low, because then your risk to reward becomes so big. I mean, it's still 3-1, but you are asking for the currency pair to move quite significant amount of pips. So sometimes it's okay to put the stop loss not below the entry candlestick low, because the candle size is just so big. In this case, as you can see, I mean, this candle is bigger than pretty much half of the Asian session itself. So I put my stop loss pretty much at the opening price of the entry candlestick, just like a few pips below the session low, but the natural stop loss, the good stop loss would be somewhere here, like below the candle low. But then I would be asking for this currency pair to move like way too much to actually achieve the take profit. Already, I would say this position was lucky that the pair actually been bullish for the whole day pretty much, and eventually within the first hour or two of the US session, it achieved our take profit level. But usually when you are asking for such a big move, it's fairly difficult for the currency pair to move that much, because that's not crypto, that's not stocks. currencies are moving fairly slower, I would say. So yeah, the entry was good because we had the session high, session low. First London candle breakout, boom rejection, back above the session low, back above the EMAs, and a very nice, strong, big green candle. So that's the trade. Fairly nicely done. As you can see, we had some reaction at the session high, but that reaction did not stop us from pushing towards the take profit. Next trade is a break-even one. Once again, fairly good entry. I believe you can already see why it's not the perfect one. Yes, that's because the entry candle is not actually touching, or is not super close to the session low. But as you know, sometimes you can take the risk on these, especially when you already have some profit locked in. So we had the Asian session super bearish. As you can see, we don't even see the high in this case. We have the session low. London, first few candlesticks, retest, rejection. This is a nice rejection, but it's not above the EMA, so no long position here. And then boom, another retest, rejection, and then continuation candle. Above the EMA is nice, strong green candle. The only problem is that it's not actually touching the session low, or it's not like super close to it. But well, sometimes you can take these trades. And what happened? Once again, we had some bullish push, reversal, and then pretty much followed by consolidation for the rest of the day. We've been pretty close to stop loss here, like very close, like 1-2 pips shy, but well, it played out. So here we have pretty much a break-even position. By the end of the US session, we had to manually close it because we never leave the positions open overnight. So that's the position. Another one. It's an important one, and let me check why. Yeah, I can see now what happened here, because you should be also confused why we had a short position here when we kind of had a long position here. Well, at least the signal for it. And let me explain, and this is something that you should also take note, because it's fairly important. I wouldn't say it's a rule, but from my experience, especially experience trading this specific strategy, let me explain why I did not consider taking a long position on this candle. First of all, we had a session high, session low. The session was fairly inactive, sideways session. London, we had some movement. We had a break below, then a comeback, not above the EMAs, no long position here. We had an interesting candle here, but it's way too far from the session low to consider taking a risk. We had a comeback, and then this candle is a fairly nice. Yeah, we are very close to session low. We are above the EMAs after a nice strong bullish candle, and also after the break and retest, a break and rejection, I would say. And this is the fairly good entry candle. The reason why I would not take this long is because this candle, your entry would be right here, which means that you are already trading well within more than half of the whole Asian session range. So this can actually give you an indication that the market, at least at this current moment, is super slow and super messy in terms of the movement. It is moving sideways with a very small indecisive candlesticks. This is why when you have such a small range, such a small range, very sideways movement, and you have an entry candle within the Asian session range, and it's pretty much more than halfway up already within the range, it's not the best practice to take these positions. What I would love to do instead, when you have consolidated Asian sessions and even the first part of the London session, is to wait for the breakout entry. When you see the break of the session low or session high, these setups are performing way better, and your risk of getting a loss or a break-even trade is way smaller when you're taking the breakout entries. To be honest, usually you will not get an entry as well if the whole Asian session is like that and the first part of London session is like that. Usually the pair continues to be a pretty boring day. But in this case, as you can see right here, we had the candlestick that closed below the EMAs, below the session low with a nice red candle. And the reason why it's a valid entry is because we already had the break and retest. That's the breakout. That's the confirmation. The whole thing that happened here can be considered as a retest because, well, we had a break, we had some comebacks, some rejections, some continuation, and then here we had a strong continuation below the session low. This is the only reason why it's a better position to take with way higher potential to make some profits because you are trading outside of this whole very slow sideways movement. You're not trading within because usually what happens, if you would take this a long position right here, what would happen most likely? You would go to the session high and be stuck here as well. Just sideways movement. There is no momentum to break. There is no momentum to break out. So most likely you will be stuck within some drawdown right here and eventually a stop loss because, well, within the US session it started to move, but it just doesn't make too much of a sense to enter in a very sideways consolidative market when you are trading completely within the range. Here we are trading outside of the Asian session, which means that we have way higher chances to actually see a stronger movement because we are trading the breakout of the range. Yeah, so this is why I took the trade, and I believe you clearly understand my reasonings, and just make sure to make notes when you have such I would say slow and shitty conditions in the markets and your entry candle is within the small range like that, it's better to avoid taking such positions, even though that's a valid entry according to the rules. But common sense and experience also is a big factor when you're choosing whether to enter or not. So in this case, it's better not to. And then we had this candle and pretty much straightforward all the way. Yeah, few candles, boom, we are in. And that's mainly because we finally received the breakout candle, the breakout continuation right here. So these chances are way higher than buying here and expecting it to show some strong momentum for a breakout. Yeah, so I believe it's super valid now. Next, we had a loss. A loss, yep, a fairly decent trade. If you would apply the rule to move your stop loss to break even after halfway point, then you would be out at break even in this case. But for backtesting purposes, I do not, so I consider this as a loss. Well, what happened here, also fairly good entry. Asian session, it's not super active, but it's more active than the previous position. Yeah, I mean, we had some movement. Then we had London. We had some kind of a breakout, but it's like 1 pip shy from like 1 pip above. So it's not the super valid one. Yeah. Then we had some mess, kind of continuation, but I wouldn't classify this as a confirmed breakout because, as you can see, it's just less than a pip maybe above the session high. So I would prefer this to be a break than a retest or continuation. But in this case, what happened, we had a break, we had a rejection, and a nice strong red candle below the EMAs after the session high retest and rejection. And yeah, it's not also touching the session high, not the super perfect one, but it's like 2 pips shy from the session high. So it's an okay position to take. especially when you already have some profits in. So we took the short. The market went pretty well for the first half, and then within the US session we had a reversal and completely took us out. So when you look at the bigger picture for the whole day, you can see that the market was fairly moving nowhere. It started fairly here, it ended pretty much few pips above it. So it's a pretty sideways movement. Next candle, next position, sorry. A good one, also a risky one. I believe you see why, and this is what I want you to do. When I open up this chart, you should see in like, I don't know, 10 to 15 seconds if it's a good entry or not the best one, why it's not the best one, and move on. Okay, it should become boring to look at these episodes. So the moment you feel bored, that's the moment you actually that's it. You know the entries, you know what's happening in the market. Session high, session low, London, nothing. Retest, rejection, continuation after rejection. Great entry, but one thing, it is not touching the session high, and you can take these trades when you already made some profits. And as you know from the previous trades, we are already well up for the month, so we are able to risk this 1% to actually make some profits. Stop loss is also it could be even lower, I would say. It could be somewhere right here, which would be also a valid stop loss, but I just wanted to make it slightly above the session high, and instead, in case something like this happens again, like a small retest of the session high. Well, in this case, it did not happen, and we had a pretty straightforward movement all the way to the take profit area. Next, we have a 1%, which I believe is going to be, super slow market. Once again, session high, London, a break, rejection. We stayed below the session low. Sorry, session high. It becomes like a tongue twister. This would be classified as a potential short entry, but I just did not want it to take another position that is not super according to the rules. Yeah, we already had like 2 or 3 of these, so yeah, it's okay entry, but it's not near the session high. So I just simply said, okay, let's be a bit more patient, or just miss the trade, doesn't matter. So we got a bit lucky because the market came back for a fresh retest and then strong rejection. Still, it is not touching the session high. It is not a super perfect entry where all 3 elements are achieved, but it's good enough. It's good enough. Strong red candle below the EMAs after the session rejection. So it's a good short. Stop loss could be a little bit lower as well, but just to make sure, I made it a bit bigger. But that doesn't matter because for the rest of the day, the market was pretty much dead, and it stayed dead for the whole US session, so we had to manually close it, and that's about 1% of profit. Next day, I believe same thing happened. Not the same thing, but by the end of the US session, we had to manually close it as well. If you would apply the stop loss rule that you can move your stop loss to break even on a halfway mark, then I believe this would be just a simple break even trade without you having to do anything. But in this case, we do not. So once again, session high, session low, we had a break, a comeback, continuation. Beautiful entry. Stop loss is good one. The entry is good. So for the first part of the day, we had a very strong bearish move. Then it stopped for a while within the US session, mid-US session, and reversed back to the upside. It happens sometimes. It's normal. It's pretty much normal, I would say. Yeah, I mean, not every position is a winning, not every position is a losing one. It just happened, yeah. A mid position, mid a trade reversal. It happened, okay. So basically, it's a fairly simple break-even trade. Next is a loss. Good entry, but not good enough for the market. So session high, session low, London, fairly kinda a retest, not super valid one, then followed by a real retest and rejection back above the EMAs, strong green candle, and after the session low retest, so that's a valid long position. And what happened here, we had a few hours of consolidation, eventually reversal back to the downside, and eventually moving to our stop loss order. Next is also a loss. That's a very quick one. Very quick loss, to be honest. Stop loss could be higher on this one. I can see it already, but that's a fairly big candle in comparison to the previous ones, like all of these. So I made the stop loss just a bit smaller in this case, as you know why, but you could make it bigger, but then you were asking for a pretty significant move. But once again, this is one of the trades that I said, to be honest, and it's two mistakes, maybe one. One big mistake in this case is that the market is moving too much of a sideways to actually take the trade. And it's still, I took the trade, a short one, and this is why we actually got stopped out. As I just explained a few positions before, when you have such a messy Asian session and then a big entry candle which covers pretty much half of the whole Asian session, it's not the greatest to take these trades because most likely you will get a stop loss or a very slow boring day. It's better to trade the breakouts of the session high or the low. In this case, we had a short here of a session high rejection, and it was not super well, as you can see. Few candles, boom, stop loss. Okay, it happens. And the last trade of the month, a very beautiful one, a very simple textbook trade. Session high, session low, we had a break, retest, continuation. Below the EMA's nice strong red candle, after the session break and retest, and continuation. So it's a short, stop loss is a good one, take profit is a good one, pretty much straightforward drop, and we achieved our take profit pretty much still before the US session began. So it's a quick one, a quick 3%, beautiful. So that's NZD USD January, 10%. And I believe you already should have a super clear understanding of how the strategy works and how all of these entries actually work. So if you're still struggling, watch the next episode. And if you're still struggling, rewatch the whole section of refining entries. And trust me, you will actually get it. Eventually you will get it. So thank you guys for watching. Let's move on to the next episode. Alright, welcome back. Welcome to Refining Entries. Welcome to the next episode. And if you are still watching this episode after all of the previous ones, good job. You are really, really dedicated to understand the strategy. I believe this should be the last video of the Refining Entries series because we covered a lot of trades. So I believe that this should be the last video. And if you still have some questions about the entries or you are not completely confident in finding the trades, make sure to first of all rewatch all of the episodes. And then if you still have some questions, always contact us via the email, and basically we can schedule maybe a call, maybe a chat, whatever, to answer all of your questions so you are fully confident. Okay, so in this last episode I will show you Euro USD once again, January of 2022. And to be honest, this is a good example where the currency, the Euro USD pair, I would say it's just not my style. I used to backtest and I used to even trade a bit this currency pair last year, very slightly in 2020, but it's just not performing for me. I just don't find the optimal entries, and it's one of those currency pairs that I would not recommend to implement for your day-to-day trading for this strategy, even though it still made a 5% in January, and but it's just not a it's just still from my experience from last year for 2 years ago, basically all of that Euro USD trades is just not generating good profits, I would say. It is still in profits because of the risk management and risk to reward, but eventually I wouldn't say it's the best pair. And as you can see, throughout January we had quite a lot of stop losses, 1, 2, 3, 4, 5 losses in total out of 9 trades. So we had quite a lot of losses, and we still managed to make 5% because we made 3 profits as far as I can see. So it's pretty good, but it's not the greatest. So let's go ahead and take a look at these trades. What happened here? Okay, I believe I can just stay in silent and you can go ahead and tell me everything what happened here. But because you're watching this, let me go through these trades just one more time. Session low, session high, London up on the first candle, breakout. Okay, we had a break. Now we need a retest and continuation. We had a retest here and a few more candlesticks of a retest. We didn't have any kind of a short signal. No candles. This candle is not below the EMAs, so this is why it is not a valid short signal. This candle is pretty much sitting just a pip or so below the EMA, but it's the candle itself. When looking at a big picture, you wouldn't even notice it too much. So I wouldn't classify this as a strong red candle. Now this is a good candle, but this is just a regular candle. Yes, it's below the EMAs, but I wouldn't classify this as a strong selling pressure forming to simply took a short. So it's better to wait one more candle instead of entering on a not so sure candle. Okay, next candle, boom, continuation. Exactly. So it's a nice strong green candle. As you can see, it's way more visible, it's way more valid visually than these few. And we had a break, we had a part of retest and continuation candle, so it's a long position, stop loss. It could be a little bit even smaller, somewhere right here maybe would be good enough, but we made it a bit of a bigger, and eventually we had some push to the upside, a slight retrace, and then continuation towards the take profit area. So it's a fairly good one. And now we have some losses in a row. Okay, that's some spiky weekly price action, so most likely some fundamentals. What happened? Session high, session low. We had a retest and a break. Now we had a retest rejection and a break, and now we need a retest from above and continuation in order to go long. So what happened here? We had a break, a slight push, no longs here, then a reversal back below. So this candle is also a good enough candle for a short position. It's just, as you may know, I'm just not the biggest fan when you have one candle break and then one candle come back without any kind of a price action, just a bit of a below the session high as well, like in this case. Like if all of this mess would happen here and then we had an entry candle, then it's way more valid. In this case, I just decided to wait a few more candles, maybe 1, 2, 3, whatever candles it takes, rather than taking a bit of a riskier entry, because knowing Euro USD from my back experience is just not the best pair, so it's just better to be safe. And then a few candles later we had another confirmational candlestick, so this is why now I took the short. This is a valid short below the EMAs, below the session high after the failed break retest continuation, so it basically became a break and rejection eventually, and we had a nice strong red candle, so that's a short position. And eventually I believe these wicks were some fundamentals, some news related price action, and it's basically stopped us out, which is also okay because that happens. Next trade, another loss, fairly very good entry actually, very like a textbook entry, but not a textbook position itself. So we had a session high, session low, London, first candle break, retest, rejection. In other terms, this position became a rejection from the session low. Nice strong green candle above the EMAs, and after the session low being retested and rejected. So it's a beautiful long position here. Stop loss is also pretty big, I would say. It could be a bit lower, smaller, sorry. Somewhere right here would be good enough as well. But yeah, it is what it is. But basically we had no chances of achieving success here, because the moments after we entered the trade, it went sideways for a while, for a good few hours, and then eventually stopped us out. Next up, so we had one take profit, and now this is a third loss. So basically we are back at break even, and this is already 13th of January. So by the mid-month, you're back at break even. So that's not the greatest signal for the pair. What happened here? Well, this is I wouldn't say it's a massively good entry. The candlestick is not that good. Now, shorting right here would be a good position. But, well, what happened? Session low, session high, London, break, retest, rejection, and kinda continuation. It's not massive. It's not a massively big green candle, but it's a green candle, nice body as well. In comparison to this mess right here, this is a solid continuation, but I wouldn't say it's the best. I mean, this candle, something like that right here, would be way better, way stronger. But well, we took the trade, and yeah, what happened? We had a few candlesticks of hope, and then big drop, and it closed below the EMAs, below the session high after the retest rejection, eventually becoming the rejection of the session high, and this would be a good short candlestick. But when you have an already open position, you should not get involved into additional positions on the same currency pair, so we just had to skip this. But yeah, eventually it became bearish, and if you would skip this long and go short here, that would be a better solution, I would say that. But of course, it's easy to say when you see the future now. When you are here seeing this candle in real time, then the psychological effect is different, and you see, okay, this is a valid entry. We had a break, we had a retest, and we have continuation. I want to say kinda continuation, because the candlestick itself is not like super visually exposing bullish pressure, but it's still a valid entry. So yeah. Okay, next up, 1% position. Maybe that's a bit more than 1%, maybe 1.25 or so. But that's a very, very beautiful entry. Let's zoom in a bit. Session low, session high, London retest, break. So we need a retest continuation or rejection. Retest, retest, rejection. So it became a short position. Beautiful big red candle back below the EMAs, back below the session high after the failed retest continuation. So it's a rejection trade. We had a short here, and for the most part the position went extremely well. Then towards the US session started to retrace, drop again, retrace, drop again. So as you can see, the moves, the waves became smaller and smaller, and eventually by the end of the US session we had to manually close it because we don't keep positions overnight, and this is a solid 1.2%, I would say, so we should change that. Then we had another successful trade, pretty straightforward, and yeah, it's also one of those riskier positions for two reasons. Number one, this is the entry moments before the US session opens, so pretty much last minute entry, because the next candle after the entry was already US session. So it's a pretty risky way to execute, but possible because we're still within the window. The second reason why it's risky, because this, what happened here, I classified as a breakout and this as a retest continuation. But to be honest, it's not, I wouldn't say this is a super valid short position, but because I believe the main reason why I was risking this is because it's not been a good month. So finding additional position, it's always good. And basically, yeah, this is a breakout by pip or two, which is in a way valid, but when you look at the common sense as a psychological part, it's better to avoid taking such positions when you have not a super clear break of the session low or session high. Like in this case, we have session low here, session high somewhere where we can't even see. For the most part, it's been super messy. The box of nothingness, like no price action right here. London as well, for the good few hours we had completely mess. Then by a pip or two, a break, comeback, a retest, and then rejection. So in a way, continuation, sorry. So this would classify as a break, retest, retest, continuation. No bullish, no long signals here because we are not above the EMA. So as you can see, the EMAs are guarding us for a false entry very nicely here, and this is why the EMAs are here for. And here the defense was broken, kinda. Yeah, we had a strong bearish candle below the EMAs, below the session low, after kinda a break retest continuation setup, but it went extremely well. As you can see, very straightforward. The reason why this happened within the US session is because for the most Asian session and most of the London session, we had a super slow day, very, very small movement. So the whole pressure combined and accumulated within the US session and eventually exploded here. So this was a solid position. But the entry candlestick is good, but this setup that you classify break retest, kinda. Then followed by another loss. Once again, very good entry. It just happened. You can't do nothing about it. Session high, session low, London, first few candlesticks, nothing. Then strong push. Now that's a breakout. That's a break, followed by retest, kinda retest, rejection, continuation. No shorts here. Once again, the EMAs are guarding us for from a false short entry, and then eventually boom, continuation candle. So that's a break, that's continuation, this would classify as a retest. Back above the EMAs, back above the session high after it's being broken and retested. Nice strong green candle, beautiful long position. So, but what happened then after the entry? Pretty much immediate reversal, took us out and even came back above. One of those trades, it happens. Followed by another winning position. Once again, it's okay. Yeah, I mean, that's better than the one I showed you 2 trades before. Session high, session low, first few candlesticks, retest, rejections all around, then boom, a break, retest, continuation. Simple, not super visually strong, but very valid. Break, retest, continuation. Nice big red candle below the EMAs after the session low was broken and retested, and pretty straightforward trade. Few candlesticks later, boom, big drop, and within the first part of the US session, take profit was achieved. And lastly, we ended the month with a loss. Once again, beautiful entry. Session low, session high, London, first candle breakout, followed by kinda just a green candle, then followed by a retest. Now we need continuation, retest, continuation. No shorts here. There is nothing beautiful about this candle that I would say nice big red candle. Definitely not. Bullish continuation, back above the EMAs, back above the session high. Nice strong green candle, valid long position, but eventually it reversed and dropped below. This would be a nice short entry if you would miss, for example, this long and say, thanks God, I missed this long, but now it's providing a good short position. It's also valid, but if you have a long position here, then you should not even look at these shorts, even though they look good, and you would be in a profit right now. But yeah, I mean, that's I believe it. Yep, that's it for Euro USD. We can go through this trade as well, because it's kinda end of US session, so it's a break-even trade. What happened here? Session high, session low, a good few hours of mess within London, then a break followed by some candles above the session high. We need a retest, continuation, or rejection. We had a retest and we had a rejection candle, a valid in a way short candle, but eventually it went a bit up, a bit down, coming pretty close to our take profit, but eventually reversing back above, and by the end of US session we had to manually close it. That's also happens. Yeah, so that's it for this episode. I believe it was beneficial as the last episode of Refining Entry, so make sure to rewatch these videos if you need, but by this time you should have a super clear understanding on how to find the entries. So thank you guys for watching, wishing you all the best for your future trading and backtesting. Make sure to backtest yourself, and I will see you on the next video.